Hello and welcome to a brand new episode of Fintech Ki Baat Dil Se. Today we have with us Ankit Mehra, founder of Gyandhan. Gyandhan is a startup that is focused on enabling educational loans for people who are trying to go abroad and are looking to raise funds for that. Thank you so much, Ankit, for joining us today. Thank you so much for your valuable time. It's a pleasure having you here.
Yeah,
Great.
thanks for having me.
Yeah, Ankit. So Gyandhan, right? This is a problem. Basically, it's solving a problem that a lot of people who are trying to go abroad and study face, right? Educational loans, getting funds for that expensive course abroad. Like a lot of us aspire to go abroad, but not all of us have funds. And I have seen too many dreams shatter just because the funds are not there. So, would want to hear a bit about Gyandhan first, what it does, and then secondly, after we are done with that, we want to hear from you on what inspired you to start Gyandhan, and how did you get into that business? What was the problem statement that you figured out? How did you come across that? So it's a two-part question. Over to you.
Sure. So Gyandhan is an education financing marketplace. What we do is we work with banks and NBFCs to help students get the right loans. So on the one hand, we help students figure out which is the best loan possible for them. And on the other hand, we work with banks and NBFCs to ensure that the new products are developed and the policies are well intentioned and make sense. So you don't create policies in vacuum so that the product doesn't really make any sense. So that is really how we work. In addition to being a marketplace, we are also an NBFC. So now in the last 1 year or so, we have also started doing loans on our own books. We started with the focus on education loans for studies abroad, but at this point in time, we are also catering to online courses or edtech programs or offline upskilling programs in India. That's high level what Gyandhan is. If I had to summarize, it is really for us, the objective was to equalize and expand access to higher education. So we didn't really have the idea of study abroad kahi bas karna hai. It was really, hey, how can we make education more democratize education? And the idea was for us, given our backgrounds, we felt if we can simplify access to finance, we will have made a kind of contribution in that entire journey.
Understood. Superb. So, would also want to know a bit about your background, right? So, where do you come from? Where were you before this? And what essentially struck a chord inside you that यार नहीं खुद का कुछ करना है और यही problem statement solve करना है. So, what was that?
Sure. So I'll start with the key. How did this problem strike me? So back in 2013, I joined ESA Business School in Barcelona, and when I joined school, it is one of the top 10 business schools in some ranking. So typically, जो भी top business schools होते हैं वहाँ पे होता ये है कि you get a loan from a local bank. So you don't necessarily have to rely on an Indian bank to give you a loan. But this was 2013. Europe was still reeling under the effect of the recession. So what happened was the local banks stopped giving out loans to Indian students. Suddenly, you had students who had gotten an admission to a top business school where the fees and all expenses will be close to 1 crore. And now they are struggling to find ways to finance it. I was trying to help my colleagues who had gotten admission, trying to figure out if there are options in India. And that's when I realized that options hai nahi. So we did our best to kind of help a few students here and there, trying to say this is the better option or that is the better option. And then when we started our course, we used to have these discussions in the MBS program, when it really just used to be a how will we solve world hunger or kind of any case discussion. And the idea really was at the back of my mind, because before joining ESA Business School, I worked at Capital One for 6 years. So I graduated, I'm a typical engineer, did my engineering and never worked in engineering. I did my engineering back in 2007 from IIT Kanpur, joined Capital One straight out of college, and been in financial services for 6 years. And 2013, when I was shifting with the idea that I'll move back to India after my MBA and I'll start something in the sports sector. So the idea was let's move from US to Europe, see a few things. I knew the school had good tie-ups with Football Club Barcelona and a few other sporting companies. So I said, okay, I'll do some internships, some projects, and then I'll get some understanding, work with them for a couple of years, and then move back to India to start something in the sports sector. But once I encountered this thing, it really, the entire Capital One experience came back into mind, because Capital One, we were doing risk-based pricing. So we were trying to say, how can we find the best way to provide access to credit in a sustainable fashion? And it was really one of those early discussions we were having in the classroom around developed economies, developing economies, population, hunger, and whatnot. That I said, uh, it really makes sense to take a shot at it. I mean, if we can really make a difference here, then at least I will have the kind of ability to sit in this conversation and make some meaningful contribution. And even if I fail, I will know 10 ways it did not work so that someone else can figure out the 11th way. So that is really the idea for me. And my co-founder, actually, Jainesh, has a very more personal story because Jainesh, prior to getting into, so Jainesh is a product of IIT Delhi, worked in GS Associates, and then was working with me at Capital One. But prior to getting into IIT, Jainesh was a beneficiary of Super 30.
Mm-hmm.
Realized Jainesh was not the whole aspect of study abroad wala problem, but it was really a case of, hey, if I don't have access to finance, I might really be bereft of even the opportunity of getting in access to coaching. Right. So that was the thought process that was at the back of his mind. So when I decided, hey, I will move back to India to start Gyandhan, I knew I had to reach out to Jainesh to discuss this idea and see if he wanted to kind of leave his job. And at that point, he was planning to go to Chicago booth. So saying, hey, don't do an MBA. Let's do an MBA here itself by figuring out the journey together.
Awesome. That sounds like a really interesting journey, And probably one thing that I would want to understand from you is, so lending in India has always been a very structured piece when it comes to the traditional organizations, regulated entities, NBFCs and banks. And then from 2017 onwards, there has been a plethora of startups, fintechs, digital lending apps, completely either in the gray area or completely unregulated, operating and giving out loans and all of that, right? So how do you see, there have been recent efforts from the regulator to essentially, try to regularize everything and try to bring everything into the purview of the regulations. But how do you see the education loan market? And I would want to divide this answer into two segments. When you talk about study abroad loans, that would be one thing. And when you talk about education loans in India, that could be a different thing altogether. So how would you divide the market in these two segments and probably talk about innovations in both of them? And how do you see that going forward, given the current situation or the current guidelines?
Sure. So at a high level, I would say education loan has been the one of the most underserved segments. Historically, I mean, we've had the push from the government at multiple stages. We had the Indian Banking Association guidelines come in somewhere early 2000s around, hey, we should make access easier. And those were well-intentioned guidelines. But what ended up happening was, because of multiple reasons, it really just created a bubble in the sense that you had all these, I would say, you had a proliferation of MBA and engineering schools, which are not really educating students or not really providing gainful employment. But banks were giving out loans because of some push or some other aspects, right? So I think education is a public good, and higher education might not be a public good in my mind. It is a capitalist area, but we kind of, in terms of implementation, it got lost somewhere. So what ended up happening was you had this entire early 2000s, mid 2000s, when you had a lot of loans being given by public sector banks. And then these are longer tenor loans. So after a certain period of time, you started seeing losses. And now what ended up happening in early 2000s or the mid 2010s is essentially banks saying, hey, I have this many losses. Why should I even get into education lending? I mean, this is the asset class. So anyone you talk to, they will say that, hey, there is 8% NPA, 10% NPA. Why should we even get into it? Right. So
that high of an NPA in education loans.
Well, actually, I mean, there are segments wherein the NPAs for some of the banks, public sector banks in the less than 4 lakh have been like 20% or 25%.
Whoa.
So again, that is purely what I was saying was down to, I mean, if I give out the purpose of a loan is ki, matlab, what is it being used for? If it is used for just getting a degree, which will not get you gainful employment after that, that's a big issue, right? And that is what we've seen in the industry. So the domestic market has been, if you look at the RBI reports, it's been constantly declining for the last many number of years now. Because banks are doing some amount of lending, maybe due to meet the PSL norms and so on and so forth. But really, there hasn't really been a grounds up understanding of, hey, we really need to understand which segment should we lend to and do it right. The concern has been banks have said, hey, let me just focus on getting my housing loan book growing. Why should I even try to solve this problem? right? So that's why you had these NBFCs come up saying, hey, we'll focus specifically on the education loan segment. The study abroad was something which was historically not really looked at very aggressively by any of the players. Really, thanks to Credila that came up in the late
Yes,
2000s,
yes, yes.
HDFC, and then subsequently were acquired by HDFC over the years. I think they were the pioneers, if we talk about the Indian markets, in terms of helping students get loans for higher studies abroad.
True, true.
Banks have still not, banks had still not really looked at it as aggressively when we moved back in 2015. Now in the last couple of years or so, we are seeing that banks are increasingly looking at this saying, hey, this is probably a good asset class, and we can build a huge book if we really focus on it in a meaningful fashion. But at a high level, I think there is still a lot of room, a lot of improvement required, both in terms of process, but more importantly in terms of product as well. In terms of what I was saying, which are the courses which are getting gainful employment? Where should you be doing lending? I think the players who solve that part of the puzzle will be the ones who will really kind of increase this market in a sustainable fashion.
I completely agree with you. I think this is the classic how to underwrite problem that we are also facing with the NTC segment or the underserved segment in the Bharat space, right? How do you underwrite them? How do you underwrite their ability to pay or intention to pay? And here in this case, you would want to understand how whether they will have an ability to pay after a future date, because you'd be giving a loan which won't start giving you returns for at least 3 years or 2 years, right? It would be a 2 years or a 3 years moratorium.
Exactly, and so that this is the idea that I had when at ESA, when I was saying, when I was helping my colleagues figure out ways to get a loan, because in my mind the entire Capital One way of thinking is working at the back of my mind. I was thinking, okay, this person has this uh, student has such and such background, done work at such and such place, gotten admission, they'll probably get a great job. Versus this student has gotten an admission into ESA, but I'm still doubtful whether they'll get a great job or not. So it was really just that kind of judgmental underwriting was playing in my mind. And really, what we did the first year, Jainesh and myself, was really build out the first model, trying to collect data from different sources to say, hey, can we really figure out employability first? Because if I can predict who will get a job, then I can say, okay, I know now the ability is there. Now I have to figure out willingness part of it. But if I
True,
cannot
true,
figure
true.
out employability, then I have to wait for getting a property and doing a loan based on property.
No, agreed, agreed. I think standalone education loan is a lot more required because a lot of people don't want to risk their property just to get an education loan, which would be a smaller amount. But here, I think building a model from the scratch is probably the best way to go. I mean, I would want to understand from you, if you're willing to share, on what kind of parameters do you look at when you, let's say, underwrite a student, for example, who has done engineering, is going to do his MBA from abroad, and has probably a couple of years of work experience. So how would you look at that student? What are the parameters that you would see as a positive or a negative, and a bit more around that if you're willing to share?
So, so first of all, I'll remove the kind of traditional parameters, because we do look at your CIBIL, we do look at your, if your co-applicant CIBIL, indebtedness, and all the traditional parameters are definitely something we will look at.
True, true.
But at the core of it, if we are saying that, hey, it is a future repayment, so we need to predict employability, then as you said, I think we try to look at effectively your resume, let's put it this way. So, and the idea really being, we have, the question is, so I'll give you the example. When we started, then we built our first model. The feedback when we went to the industry experts and we said that, hey, we have a model, we think it works really well. We have shown this in some tests and some samples. The first feedback we got was, यार ये क्या दिखा रहे हो, मतलब बच्चे का हार्वर्ड में हो गया है तो मतलब सेट है, मतलब there is, why are you even building such models? And what we said to them was, यार, it's not necessarily a case of कि हार्वर्ड में हो गया. पहली बात तो हार्वर्ड में हो गया does not necessarily mean कि लगेगी, because हार्वर्ड में भी बहुत डिग्रीज हैं. पहली बात.
True.
सेकंड थिंग इज कि चलो आपने हार्वर्ड का सॉल्व कर दिया, बट बाकी भी तो कॉलेजेस है ना, मतलब हार्वर्ड इज नॉट द ओनली थिंग. आपको अगर डेमोक्रेटाइज करना है तो इट हैज टू बी अ रिटर्न ऑन इन्वेस्टमेंट. सो रियली द फर्स्ट aspect is, if I talk about the student, the idea is, as you said, someone who is an engineer going to do an MBA, 2 years experience. Now the thing is, what did you do in engineering in? Where did you do an engineering from? What was your course scores? Similarly, where are you going to do an MBA? Right? Is it a general management? Is it a specialized course? What has the history of that college been like? आपकी जो 2 साल का एक्सपीरियंस था, what is your trajectory in that 2 years itself? Right?
Hmm.
The idea is if you get like this data for like 60,000 students or 100,000 students for over multiple years, then you can start building basic models to say, hey, I know if someone coming from X school going to Y school has a certain amount of employability probability versus someone coming from a maybe A school going to the Y school has a different employability. So it's really these basic things, but really trying to figure out where is data and where is noise. And then trying to build the model and kind of saying, hey, this is how we'll build it out. And then the second aspect obviously becomes key. You also have to take into account, मतलब वही कि MBA करो तो जो मैंने कहा कि it's not a student specific thing, but are you going for a specific specialized degree? Are you going for a general management degree? Then what is the current environment? What is the predicted environment going to look like? What kind of a job will you get? Right. So that will be the what we call in modeling exogenous factors trying to in some form of fashion coming in, giving us finally, hey, what is the pricing I should have for this person? Or is does the product even exist?
Got it. Got it. So this could probably be divided into two things, right? One would be whether or not this person should get a loan, and if yes, then what is the pricing that should be followed.
Exactly. Because I think that's what I keep on saying that I don't think unsecured loan is the only answer. I think both risk-based pricing may we say there is a spectrum. There might be a segment wherein secured loans are the only sensible options. Or
True. True.
even then
Definitely.
you should not even do that because you will just be left with the property and you have to figure out to sell a property. You're a bank, you're not a real estate agent. Right. At the other end, there are segments wherein unsecured loan should be the way to go because the student has a credential, they can repay the debt accordingly.
No, completely understood. I think this is some really great stuff that you guys are doing, and specifically, what would be really interesting to see is how the pricing model actually performs over a period of time. I think that could probably be a very interesting fact to see. Let me take a step back here. What I want to understand is when you look at educational loan as a product, in the entire lending gamut in India, what percentage do you think educational loan contributes to, or approximately, क्या उसका current standing है in that sector?
So total originations, I mean, so again, education loans, I'll tell you, and this is something we see in the study abroad more specifically, ki, because of the issues and because of the complexities, so on and so forth by traditional lenders, what happens is there are a lot of people who take loans for studies abroad, either in the form of a lab or in some other form or fashion. So education loan नहीं लेते हैं, but उनके लिए बाकी product ज़्यादा convenient है, because बैंक को समझ नहीं लगता है कि education loan कैसा है. But if I myself to education loan, so pretty much the portfolio of all banks put together has been around $10 billion mark, and that has been consistent. मतलब वही जो मैंने कहा कि it has been decreasing over time, but it's hovered around the $10 billion mark, which is really small.
I don't know, it's $10 billion is like really small, but does that also include the labs or the other loans that are taken, or does it not
So
include?
this will not include the lab product wherein the purpose has been education loan. This will be purely education loan product. Now it could be an education loan against property, but if it is a lab wherein I went out to my personal bank and kind of took a lab, but then I used the money for something else for higher studies, that's not being counted here.
So, I mean, as per just on your understanding, on your market understanding, how much do you think would that market be? Like, where you don't know the end user purpose, but a guesstimate would be, a helpful way.
Sure. So what we um, so I'll tell you, lab to फिर भी is a decent product. There are people who go for effectively informal financing, which are really high interest rates, right? So I'll tell you, on an annual basis, what we kind of so if I just limit myself first to study abroad is of roughly a $30 billion annual spend. What we kind of guesstimate, kind of talking to different industry leaders, is that probably we originate anywhere close to 7% of that on an annual basis. So it's peanuts, is what we originate on an annual basis. Everything else is self-financed. Now, what we know is on that self-financed bucket, we expect that if there is a $2 billion kind of origination happening on a yearly basis, we anticipate that roughly $500 million ke aspas is coming through other means as well. Now, that might be the ridiculously highly priced informal financing, and people are taking it because the formal process is just so inconvenient, and it's still a lot of way to go. And then some cases would be lab.
Agreed, agreed. So in this situation, let's say over the next 5 years, if you were to take a guesstimate, what would you say the total market size or the market potential would be for an education loan product, a proper, well-built educational product?
So when we started out, and I think we started out with the whole marketplace aspect because we said that, hey, we'll work with banks and NBFCs, and we don't want to focus on the cost of capital, but we can do a much better job at predicting risk, so cost of operations, cost of risk, and all that other stuff. As I said, now we are in the NBFC space as well because now we want to work with the banks and NBFC still, but more in a co-lending fashion. Because what we've realized is if the entire journey has not been solved, addressed well, then at some point in time, students get frustrated, right? Because if the dependency is on a certain player, I cannot really influence it beyond a certain point.
True,
But
true.
I think if I talk about what is the realizable market, right? So I think of the $10 billion annual spend that we, or $30 billion annual spend that we're talking about, if we look at international comparisons, everywhere almost a third to almost 40-50% gets financed by formal credit. So in my mind, just the study abroad segment itself should be a 10 billion annual opportunity. And I'm not talking about
Seriously.
consulting. And I'm not
Huh.
talking about consulting reports which say that the study abroad market will grow to $80 billion annual spend in the next 3 or 4 years. Right.
Hmm.
So even if I take the current market size, so to speak, I think the opportunity is almost growing the current market itself by a factor of 5. And
No,
I think
definitely.
in the domestic space, I think there has
Hmm.
been a lending going on historically. I think it's really a case of finding the right channel. So I wouldn't say, कि, hey, domestic mein we want to increase, we think that the market will expand 5 times. But I think it will be a case of, hey, the market probably expands twice or maybe 2.5 times. But really, it becomes a much more profitable market, which lends to sustainability and sustainable growth rather than just saying, hey, let me just put money because there is some norm I have to meet, and then I'll blow that money up.
Got it, got it. So no, that really does make sense, I think. And going forward also, I personally view is my personal view is that when you look at even the domestic education market, right, wherein there are a lot of courses coming up on Udemy, Coursera, those kind of things, as well as models like Byju's and those kind of startups, which also offer the loans embedded into their product so that you can directly avail them when you are buying. I think those kind of market will also probably boom up a lot
Yep.
because the cost of education overall is anyways going up. When you look at a cost of kindergartner paying a 5 lakh fee per year to get into kindergarten, I'm like, that's ridiculous, right? We
Yeah.
all have studied probably in schools wherein we were the entire annual fee in 10th standard was $500.
Yeah.
So this kind of really, is a very much of contrast. And it's not that inflation has gone up that much, it's just more about the lifestyle inflation of these kindergartners.
Yes.
So the idea is all of this at some point of time would probably require some sort of financing, either when you want to break the payments into EMIs rather than a lump sum annual fee payment and those kind of products. So the market potential is huge, and I think anyone who cracks the model, taking a step back, I would probably feel that this should be divided into two pieces, right? One would be the school and the ancillary courses, right? The Coursera and those kind of things financing, and the second would be higher education financing. So I think two separate models, one on the higher education and study abroad piece, and one on the school fees would probably be, pretty like those two people who essentially crack those two would be, really successful is what I feel.
Absolutely, because you, I mean, hit it on the head. Essentially, there is one product wherein it is you're trying to base the product on the student itself, on the future employability. Whereas in the school segment, really, there I cannot build it on the student uh, future.
Agreed.
It's more a payment product or it's more a affordability product, kind of trying to break it into multiple chunks so that it becomes more affordable for the parent.
Agreed. More like a BNPL kind of a piece
Exactly.
for the younger crowd. Superb. So this was a really interesting piece. Want to take a step back here and talk more about the guidelines that have recently come into play, right? So before I jump into the guidelines, I would want to talk about uh, partnerships and the importance of that in lending, right? So I mean, we have seen that digital lending recently. I mean, in last 5 years, if you see, 80% of digital lending has been happening through partnerships, right? It's been happening through mainly through NBFC partnerships. Banks have not been that super active, is what my observation has been. But a lot of I wouldn't name these NBFCs, but a lot of NBFCs have started, having 15, 20, 30, 35 digital partners or digital lending apps as today termed by regulator. But before that, they were not, there was no legal term for these guys, but there was a lot of partnerships. There were multiple models like FLDG, co-lending and all of that. So between like last 3 years when these kind of innovations happened, like a lot of red flags went up when COVID and the loans are not being filled, and then there were many extreme collection mechanisms that were implemented. And after that, guidelines came into play, limiting the kind of partnerships and the models that could be operated and all of that. So first of all, before we start commenting and try to I understand the guidelines, I would want to hear your view on how important partnerships have been for lending in your space. Like, so you yourself were working in partnership with a lot of banks and NBFCs trying to source the right kind of leads for them, trying to underwrite them or pre-qualify them, and then send it over to them. So we want to understand the importance of partnerships in this specific segment overall, the education loan segment.
So I think partnerships are very, very critical. I mean, I like to keep I love that word that I learned some time back in B school around cooperation. I think fintech is a cooperation play wherein you have a competition as well as you have a cooperation going along with the partners.
True.
And specifically, if I talk about education lending, I think, and within that, if I talk about the study abroad, because you talked about the two segments, BNPL and the study abroad. I think in the study abroad, if I talk about it, these are much longer tenor loans, large ticket, 10, 15-year repayment cycles, and so on and so forth. Kind of just by the very nature of it, it is more a bank-like product.
True.
Right. As an, if I were to start a startup today and kind of say, hey, I'm going to do all these loans on my own, I need to raise a large sums of money. So like I take the example, so there is this company in the US, SoFi, which started doing refinancing at the start of the Great Recession. They raised $1 billion in 2013 or 2015. They raised $1 billion in equity.
Mm-hmm.
Huge amount, but that is the amount you really need to make a meaningful difference.
Exactly. Completely agree.
That amount is available with the bank. So I think from this segment standpoint, partnerships is the key. And that is the reason when we started out, we had this entire thought process of, hey, should we do P2P lending? Should we do something else? Should we set up in the US? There were a lot of things going on in our mind. But we said that, hey, you know what? I think we need to figure out a way wherein if the cost of the product is cost of operations, cost of risk, and cost of capital, can I really be great at cost of capital? And I mean, is this I'll be only 1% costlier that just on the cost of capital? If not, then why shouldn't we partner? Right. And if I look at it over the years now with the most kind of the guidelines that RBI had come in a few years back around co-lending, I think that if you look at co-lending, the thought process is the same. That, hey, some players, the NBFCs might be nimble in certain things. Banks are bringing the low cost of capital. If you really build a good partnership, then what you're offering to the customer is a seamless product at the lowest cost. So I think from that standpoint, partnerships are very, very critical. So whether it be around cost of capital, whether it be abundance of capital.
Mm-hmm.
And I'll also give the third aspect around the trust aspect as well, because this is something we experienced when we started out at Gyandhan. And the first year when we started out with a partnership with SBI and Axis. Now, when we started out, the first few calls I did with the customers, almost 9 out of 10 customers would say, I mean, are you fraud or you can run away or stuff like that? And I used to tell them that, I mean, at the end of the day, we are not an asset product. We are not taking money for you to invest in MS. We are actually helping you get money. So
exactly,
fraud is not a real concern to you. I mean, that has been solved to some extent, a large extent now. But at least the first year, I think the fact that we had partnered with SBI and we could tell the customer, hey, you can go to SBI. I think that also lent credibility to us. I think if I had started all on my own saying, hey, I'm kind of helping you go get a $100,000 loan to study abroad, I think many parents would have been like, okay, I'm not sure if I'll trust these guys.
No, exactly. I was wondering when you said 9 out of 10 customers asked you that. I'm like, dude, you are getting money. Why do you want to, why are you concerned about whether that person is a fraud or not? Because ultimately, money is in your account. Like, what's the next problem? I mean, it's not like they are going to run away with your money, right? I mean,
I think on reflection, what I did think about it was probably because you're not going to get the money completely upfront, right? You're going to get it in tranches. So some of the thoughts at the back of some people's mind would have been, hey, okay, you've approved me for $100,000 loan, but now,
Mhm.
or a 70 lakh loan, but now when I come to you to say, hey, give me 30 lakhs, I need to use 30 lakhs now. At that point in time, you'll say, okay, I'm done.
Ah,
I'm toast. Go figure
that
it.
could be a concern. Yeah, yeah, yeah.
Will be one of the concerns. But yeah, I mean, I think generally people get kind of doubtful on, because at the end of the day, finance is a business of trust, right? So I think I do understand that. And as I said, now we don't encounter that issue, thankfully, because we've had some experience in the market. But yeah, I mean, I think working with partners also brings credibility to a fintech in my mind.
No, definitely. I completely resonate with that. So looking at this entire segment and the importance of partnership in it, how do you see the impact of the guidelines that have come across? Right, there have been now very clear definitions, very clear locus of responsibilities on specific entities as well. So now you, since you are also a regulated entity, so
Yeah.
there will be a locus of responsibility on you for a lot of things, right?
Yeah.
So would want to understand this from two perspectives. One is that you have done a lot of partnership wherein you were not a regulated entity, but you were just a loan service provider. And in that cases, when you have done these kind of partnerships, how would you see the current guidelines impacting that business model versus when you are a regulated entity now? And you would be, kind of tying up with a lot of people who would be originating loans for you or those kind of things. In that, how do you see these guidelines impacting this business?
Sure. Um, so I think first of all, obviously from a regulated entities perspective, it's very clear. I mean, the guidelines are very clear that you have to adhere to certain norms. I think I'll give you the example first from a regulated entity perspective itself, because in the last few years, as you mentioned, there have been a lot of alternative players coming into the market, and there have been a lot of models coming in. I think the issue with that has been, obviously there has been some amount of reckless lending, and kind of consumer protection has gone for a toss, right? So I think
Agreed.
that is something we kind of were struggling with when we were putting on the regulated entity hat in the last year and a half or so, where
Mhm.
like we really cannot get into XYZ segment, because we were hearing, oh, X player is originating Y crores of loan on a monthly basis. But when we looked at the underlying asset or the underlying course, we're like, I mean, there is no way we should be doing a loan in this segment. Right.
True.
So from that standpoint, if I say what is the impact of digital, I think right now, to be honest, what I see in the market, we haven't seen much of a difference. We've seen uh, uh, some folks being scared, or some folks being doubtful how it will pan out, but we haven't really seen that meaningful, or I haven't seen that meaningful drop that I had thought might happen. So I've heard, talk to a few reasonably decent, big players in the SME space and stuff, where they have said that we have had to pull back because we don't want to get clarity representations. But by and large, I thought that there will be a lot of upheaval, right? Similar to what happened with the prepaid card space, right? But
True.
that has not really manifested itself. But I think right now, as people are figuring out the regulations, I think what might happen is you might see a drop in the total volumes, but then overall, I think eventually goes back to what we discussed earlier on, ki matlab requirement to hai. So it will come back up. The only thing will be, hopefully, it will be much more ethical, much more kind of rule based, and kind of following the right approach, the right way to do things. And that will lead to a sustainable growth. Now,
Agreed. Agreed.
as a LSP, so again, first of all, one thing was we were effectively like a digital aggregator. Now the question is, I think that is something the REs will have to look at from a standpoint that are we a LSP at that point in time as well or not? Because frankly speaking, we are not in the study abroad space. Till date, we have not really done any part of origination in terms of KYC, or in terms of any collections or setting up of Nash. We've stayed away from that. We had pretty
True.
much said that, hey, you will eventually, if I figure out that SBI is the best partner for you, we will give your file to SBI, and then you can process the application through SBI. We are there to help solve any questions, but we will not
Okay.
really be doing your KYC. And the whole purpose of setting up our NBFC, to be very clear, of setting up the RE was, the intent behind that was, hey, once we have the RE, we can do all these things in the co-lending construct, and then there is no room for ambiguity around, hey, why are you doing this or why are you doing that? So I think
Got
the
it.
why we applied for the NBFC license almost 2 years back, and just we actually applied it just at the start of the kind of pandemic. And last year when we got the license, the idea really was, hey, as an RE, then I can really follow all the regulations and kind of work with the banks to do the loan. But I think even from an LSP standpoint, if I just talk, because as in the domestic space, we do want to work with certain LSPs, right? So I think from that standpoint, I think again, I don't think there's anything wrong with in the guidelines. There might be some places where people can question things that, hey, we need clarity and so on and so forth. But I think overall, uh, it'll lead to a better kind of ecosystem in my mind.
Totally agreed. Totally agreed. So I think the way I see it is that before the lending was regulated the way it is right now, like a couple of years back, digital lending, there were a lot of people experimenting with a lot of shit. I mean, you have seen apps that ask for your sweat, blood, tears, and soul, right? As an information before they give you a 10,000 rupee loan, and they ultimately end up sending messages to your contact list and calling up people and all of that things happen, which actually sent people into shock or landed them in hospital because of heart attacks because they fell into disrepute because of those kind of activities. And no one was expecting that, or neither was it clearly mentioned. So a lot of that you see in the guidelines today mainly tries to protect the consumer from these kind of activities, and it's more about trying to protect the consumer from, or making them aware of what they're getting into, like who are they getting into bed with, how is the collection going to be, how is this process going to be. There is now a request mandate to issue a key fact statement that will talk about everything that includes APR, not just the interest rate, but also your processing fee and also any other additional fees that you're going to be there have to be factored in into the APR and a lot of that thing. So I think while we people like you and me do understand, like even when we take a loan, we kind of understand the impact or the kind of what we are getting into. When you're doing it on an app, on an impulse purchase on Amazon, and you are, let's say, using Amazon Pay, you're not expecting that to end up into this kind of a situation wherein you have 100-page fine print behind that and all of that. So it's kind of probably, it's for the better that way. But a lot of people I have seen try to also talk about how will this affect the innovations going forward? Because this is what I've heard and I'm quoting, is that the way the guidelines are structured are to inhibiting the innovations right now, right? So the thing is that will this hold back the development of digital lending for the next billion the way it should not have? I mean, is it putting constraints on innovation in a way that maybe it will push the kind of penetration that you have gotten into the Bharat or the untapped market by at least a few years or at least a decade? In some cases, people have quoted. So what are your thoughts on that?
So my thought is, I think it'll just force entrepreneurs or force people to think harder on building the right solutions rather than just getting the quick way out, I think. So I don't think it will be a case of, hey, it's going to hold back innovation, because I think that's the whole beauty of it, right? I mean, if I cannot innovate, there will be someone else who will come in, and there are multiple people out there. I mean, we are not, I mean, a group of 10 people sitting on a table might not be the only smart people out there, right? There'll be a 11th person who is smarter and kind of will come with a better answer. And I think I think I've seen that clamor a lot around it will restrict innovation. And I think I always go back to, it's a case of the fox and the sour grapes kind of a thing. Because I mean, at the end of the day, if I look at from an infrastructure standpoint, on one end, we talk about India stack and kind of saying, hey, now we have the AA coming in and we have the OSIN and so on and so forth. So I think, and we had even in the GFF, the RBI governor saying, hey, we are here for all for innovation, right? So I think, I don't think anything has happened from a regulatory standpoint when they're saying, hey, we are going to stifle innovation. I think what to say is you can't really go out there and do daylight robbery in the garb of innovation. Right. I'm using that word as an extreme because, again, the thing is, will this regulation impact players who are doing the right things as well, or who have the right intentions, who just are waiting for the innovation, kind of the regulation to come through, and maybe they were kind of walking the fine line on certain points? Will that impact them? Yes, it might impact them. But the reason the regulator had to step in was because there were a lot more players who were clearly flouting the lines considerably. And it's not just the Chinese app thing that we see in news. There were a
Right.
lot of Indian companies who were doing things which were clearly unethical and clearly
Agreed, agreed.
right. So as a regulator, I don't think that there's anything wrong with it. And in terms of innovation, I don't think it will set us back by many years. Um, yeah, I mean, will there be a lull? Yes. Will VCs be kind of scared? Yes. Uh, but then will we have better models coming up? I think yes. I've got faith on that.
I completely agree with you. I mean, Chinese apps were the very extreme cases, but I have personally also seen a few lending startups from India like doing things that would probably, or things that have happened to me also on BNPL products, right? Like I would have been like, why was not I informed of this earlier? And then
Exactly.
you kind of reach out and they're like, sir, you had accepted the terms and conditions. And I go and I check the fine print and then I'm like, okay, they're actually saying this right here. Like it's when you're getting into a lending product, you should probably actually go to the fine print. And I think that
Exactly.
is where the key FS the key fact statement will really help a lot.
Yep.
And I personally feel that I don't think this will stifle innovation as much. I mean, to a certain extent, people would kind of think twice before innovating or building out something around lending. But I think this will also push towards a lot more meaningful lending. So this is more like a right guide rails, right? This is what you have to do. These are the things that are an absolute no-no. So innovation will probably grow in the right direction rather than just growing all over in a random manner and then picking up on the right things. This will probably give more of a direct path on what can and what cannot be done. So I think that should be very interesting to observe. So I think this was a really interesting conversation, Ankit. Moving forward, I think what would I want to understand, or rather, what would I like to do as something that really worked earlier for me is a rapid fire round. So I'll have around 5, 6 questions for you.
Okay.
You have around let's say 10 seconds to answer that. You cannot take more than that time to think.
Okay.
Okay, and we'll see how it goes.
Okay.
All right, awesome. So first question is, tell me about one noteworthy fintech startup that you have come across apart from your own self.
Um, I'll give you three: Paytm, Zarada, and SoFi in the US.
Okay, but those are like really huge startups. Any smaller startup or any like insurtech, whatever field it is.
Um, okay. In terms of the smaller startups, I'll probably, in the interest of time, I'll just go with the insurance provider that we currently are using our services from, Pascare. So they've gotten us corporate insurance, and it was pretty a seamless process. So yeah.
Awesome, great, great. So second question, 2 years ago, like if we were currently in let's say 2020, uh, and you were given to be, you were given an opportunity to be a CEO of a very big MNC conglomerate. So would you rather be that, or would you still stick to being a founder?
Um, I would love to be the MNC CEO, but I think given my nature and given my kind of thing, be happier being a startup founder because I'll be a lousy MNC CEO.
All right, awesome. That's very candid of you. Thank you. Moving to the next question. This is more wherein you have to arrange the options that I'll give you in order of priority that a startup founder, early stage startup founder should look at these things in. Okay. So the question is, arrange the following in the order of importance, the way an early startup founder should prioritize it. First one is product market fit. Second one is building the right team. Third one is building an MVP. Fourth one is raising the first funds. And fifth one is identifying the right GTM to, lower the CAC.
Building the right team is obviously number one by a huge margin.
Okay.
I know. I mean, right team might be a question of right team for what I think, but if you get 5 good people, you build a more, I would say, complementary team. I think everything will be figured out. Everything will figure out over time. So I
Got
think
it.
right up there before anything else.
Right team is the number one. What's
Number.
next?
I think for me, the second thing is really around MVP.
Mm-hmm.
Because
Okay.
I mean, now that I have a team, I've found a market. Let me just throw something out there and figure it out.
Got it.
Really. Um, I mean, we've raised lower amounts of funds, so I will pretty much put the identifying the right GTM to lower the CAC before the product market fit. But I
Okay.
think, it's more a case of it might be a case of segment as well, because in some markets, product market fit might be the better thing to figure out first. I personally would say, hey, I mean, identifying the right GTM so that you can lower the kind of CAC and then the product market fit. And I think raising the right funds in my mind is the last thing, because I think no matter what you say, I think once you raise the even the first amount of funds, there is a responsibility you have to be able to return the shareholder uh, kind of money. And I think
Agreed.
that might be that might not allow you to kind of do what you want to do.
Perfect. Sir pe ek talwar aa jati hai and you have to be answerable to other people after that for what your own business. Agreed, agreed. Thank you so much. I think that was really candid of you. One more question that I have is basically, if not education loans, what other problem statement would you love to solve?
So I would actually, so when I said sports for sure, because that was why I had left my job at Capital One, kind of
Uh-huh.
ESA. So I think growing up, I did play a bit of team sports, and I think I learned a lot. I really learned the most playing team sports around
Okay.
um, many attributes of work. So I think, but what I always felt was we didn't really have a lot of focus on sports in as a society, and more around an overall ecosystem. So it's if you're playing football, then you might join an academy or a coach who will just teach you football or you run from here to there, but there isn't really a holistic approach. So something like a football club Barcelona academy or the Madrid academy. So I think that is something I would have wanted to work on, the kind of grassroots sports in India, doing it
Mhm.
more scientifically. Yeah, that definitely comes to mind. And then
Awesome.
education, to be honest, is another thing. Not just education loans, education itself is other thing.
Awesome. Awesome. And last question for the day. I promise this is the last one. Name one founder that you look up to.
I mean, again, among the bigger players, if you ask me,
Yeah.
I'll pretty much say Nitin Kamath, because more than anything, I think, I mean, so I personally value kind of consistency more than anything else. And if you look at Zerodha, whether it be the nudges that they do or the varsity, so it's not really just about profits, but it's about what is doing right for the customer. And I think that's why I kind of look up to him.
Awesome. Awesome. Thank you so much, Ankit. You have been a real sport and you answered all the questions candidly. Thanks a lot for that. And it was a really insightful session that we had with you today. I think I got a lot to learn about digital lending as well as how to probably interpret the guidelines or some of the things, and definitely got to learn a lot about underwriting and education loans. So thanks a lot for that.
Thanks for having me.
It was a pleasure having you here, Ankit. Thank you
Yep.
so much.
Thanks.